Every financial advisor in America will give you the exact same advice about Social Security. Wait until 67. Wait until 70. Get the biggest monthly check possible. And if you even think about claiming at 62, they will look at you like you just said you want to set your retirement savings on fire. But here is what those same advisors will never put on the table, and what they have a financial reason to hide. Claiming Social Security at 62 might be the smartest wealth-building decision of your entire retirement. Today, I am going to show you 3 things your financial advisor hopes you never figure out. And by the end of this video, you will have the math, the strategy, and the confidence to make this decision for yourself, not for your advisor's bottom line. Let's start with something uncomfortable. I call this the advisor incentive trap. Most financial advisors are paid based on the assets they manage. The more money they keep in your portfolio, the more they earn. It is called assets under management, AUM. Now think about what happens when you claim Social Security at 62. You start receiving income from the government. You pull less from your portfolio to cover your living expenses. And that means your advisor manages less and earns less. But when your advisor tells you to wait until 70, what happens? You need to live on something from age 62 to 70. Most people tap their investment portfolio during that gap, which means your advisor manages more. For 8 more years. I am not saying every financial advisor is corrupt. Many are genuinely trying to help you. But the system creates a conflict of interest that most advisors will never voluntarily disclose. Before you take advice from anyone about when to claim Social Security, ask yourself one question. What does their paycheck look like if I follow this advice? Now let me show you the math they hope you never see. I call this the time value secret. The conventional argument sounds simple. Claim at 62 and lose 30% of your monthly benefit permanently. Wait until 70 and earn 24% above your full retirement benefit. On paper, waiting looks like a massive win. But here is what that calculation deliberately ignores. Time. Every month you wait is a month you are not receiving money. And that money, had you claimed it at 62, would not be sitting under your mattress. It would be invested, growing, compounding. Here is a real example. Let's say your benefit at 62 is $1,400 per month. Your benefit at 70 is $2,480 per month. The advisors say wait because you get $1,080 more every single month. But from age 62 to 70, you would have collected $134,400 in Social Security checks. If you invested just half of that at a modest 7% annual return, you would have over $110,000 sitting in your account by age 70. That is money the wait. Until 70 math never accounts for. And there is one more number they never put on the table. Your break-even age. The age where waiting to 70 finally starts to pay off. That number is 80 to 82. Meaning, you have to live past 80 just to come out ahead. Do not trade your healthiest, most active years for a government promise built on a break-even that may never come. Now this third point is the one that changes everything for married couples. I call this the spousal override strategy. Here is what most advisors present as the winning play. Both spouses delay to 70. Maximum benefits for both. Highest possible survivor check. Done. But this strategy has a fatal flaw. It requires both spouses to live long enough to collect. And during the gap years, you are draining your portfolio to support 2 people's living expenses, hoping the math works out. Here is the alternative. The lower-earning spouse claims at 62. Their benefit is smaller, yes. But that check starts covering real expenses immediately. The portfolio stops bleeding. And the higher-earning spouse continues to delay, which matters most for the survivor benefit, because when one spouse passes, the surviving spouse keeps the larger of the 2 checks. Instead of burning down your investments waiting for 2 maximum checks, you get an income floor now. You protect your portfolio, and you still secure the highest possible survivor benefit for your family's future. This is what I mean when I say quiet wealth. It is not the loudest strategy. It is not the one on the poster in your advisor's office. But it is the one that actually protects your family. Now I have to give you a warning, because this is not a one-size-fits-all decision. There are 3 situations where waiting to claim is genuinely the right move. First, if you are still working and earning above $24,480 per year, the Social Security earnings test will temporarily reduce your benefit. Claiming while working full-time is almost always a mistake. Second, If you are in excellent health with a family history of longevity, parents who lived well into their late 80s and 90s, the math shifts. Living past 82 means the larger check eventually wins. Third, if your spouse has little or no Social Security record of their own, your delayed benefit becomes their lifeline as a survivor benefit. In that specific situation, protecting your spouse takes priority. Just a quick reminder, I am a financial educator, not your personal advisor. Always run your own numbers before making a final decision. Here is what I want you to take away from this video. Your retirement is not your financial advisor's retirement. Your years from 62 to 70 are not a waiting room. They are your go-go years, the years when you have the health, the energy, and the freedom to actually use what you spent decades building. The system was designed around averages. You are not an average. You are a specific person with a specific family, a specific health history, and a specific vision of what freedom looks like. Do not let someone else's incentive structure decide when you start living. I want to hear from you. Are you leaning toward claiming at 62, or are you planning to wait? Tell me your age and your biggest concern in the comments below. I read every single one. If this video helped you see your Social Security decision differently, hit that subscribe button.